Hi there. Today we're joined by Melissa Kemkes from the ARC Angel Alliance, and she's going to be talking with us about angel investing. It's great to have you here, Melissa.
Great, thank you for having me.
Yeah. Why don't you tell us a little bit more about yourself and about the organization that you lead?
Sure, I'm Melissa. I run ARC Angel Alliance, which is an angel network that focuses primarily on the state of Arkansas. So we invest in companies that impact the state either through mission or through geographically being located here, really with the goal of just driving entrepreneurship and growth in the state of Arkansas.
Awesome. Well, we're going to jump right in with our first question that we have for you today. What's an angel association, and how's it different than an angel or venture fund?
Right, that's a great question. So an angel association is really a group of individuals that are evaluating opportunities individually. If you were to join an angel fund or a venture capital fund, you're investing a set amount of dollars into that fund, and then they will be divvying up where that money goes to companies. So an angel association, you're much more active in the companies that you're investing in and the amount in each company.
Awesome. So then let's start with probably a really basic question. Why should someone join an angel group?
Right, yeah. Angel groups are perfect for people that want to invest their dollars, especially locally, and see the impact directly. So you choose where your money goes, you get to participate with the companies to determine how they launch forward and get to see your impact directly.
Awesome. So Melissa, what are some of the biggest benefits that someone gets from investing through a group or fund structure?
Right, so the biggest benefit is that you're part of a team. So you're not finding the companies, you're not evaluating the companies on your own. You get to benefit from your networks, other insights, and expertise to look at the opportunities. Also, you know, we're out there, we're finding companies. So they're companies that you wouldn't normally see across your desk just in your day-to-day business.
How does group investing help reduce risk and get better deal flow for an investor?
Right, so investing as a group, again, you get to rely on the expertise of the other group members. So they could have skills and abilities that you don't necessarily have to help when you're looking into the companies. Also, you can invest your dollars in a pool along with other angels. So whereas you would invest maybe $50,000 into one company, you could invest $10,000 into 5 companies.
Can you help explain the concept of syndication and how that works?
Right, that's pooling your money with others. So a group comes and puts together, you know, an opportunity to invest in a single company or asset, and you pool your money with other investors. So whereas a fund, you're investing along with other investors into several potential investments, this is where you're investing just into one thing, and it allows you to spread your dollars further or even meet minimum investments where you wouldn't on your own.
Awesome. So Melissa, let's say that I want to be an investor. What are the qualifications that I need to meet to be an investor in an angel group?
Every angel group is going to be a little bit different, but most tend to focus on accredited investors. So an accredited investor is someone that meets certain criteria established by the SEC. That criteria is based on net worth or income or even special accreditation you've received through the industry. So my angel group specifically, we look for accredited investors, look for people that are comfortable with having their capital locked up for long periods of time. This is a low liquidity investment. And then people that are really just, you know, addicted to learning. So a lot of the angels we see are people that are just very interested in other industries that they may not have had experience with in the past. So, you know, one of our angels, his background is all in industrial manufacturing, and one of his favorite asset classes is biotech.
So you mentioned a little bit about net worth and all that. To be an accredited investor, what does my income need to look like? What are the thresholds?
So it's $200,000 of income per year for an individual, $300,000 for a married couple. And you need to be able to say that you expect to earn that amount in the next 2 years. So even if you've earned it in the past, you have to also expect to earn it over the next 2 years. If it's net worth, you need to have $1 million in net worth, and that does not include your primary residence. And then there are several accreditations you can have through FINRA. and then those will allow you to be an accredited investor. There's actually legislation that is happening right now in the state of Arkansas to allow non-accredited investors to invest in Arkansas-based companies. So that's something that's really exciting. It's going to throw all of these accredited investor rules on their head.
That'll be fun when that change comes through. So then let's ask this the opposite way. If that's who would make a good and an ideal investor, who shouldn't consider being part of an angel investing group? Who wouldn't be a good fit for this?
If you're risk adverse, this is a risky asset class, and it's really long hold periods. So if you're risk adverse, or if you expect to have cash flows come in a very consistent way, this is not the asset class for you, right? I think that those are the two biggest things I would say if you are maybe averse to risk, or if you have liquidity concerns.
Okay, good to know. All right, so walk us through how your organization typically sources and vets deals.
So we look for deals all over. So we partner with accelerators, we speak to universities even, and then networking with other angel groups and VC funds. We're really kind of unturning every stone trying to find great companies for our angels to look at. We also have just an open application on our website, and we've gotten great applicants that just find us on their own and apply to pitch.
That's great to know. I'm sure there's a lot of companies that would want to have that opportunity. Do they contact you and put in that application, and you sort of serve as the front door?
Yes, and I'm happy to talk to anybody. So I kind of joke I have an open door policy. I love to meet with founders and talk to them about the process, and even explain to them maybe if we're not the right fit for them at this stage, why and when we would be. So I put my email addresses on our website. So
awesome.
Yep.
For the companies that come in and you review, what does the evaluation process look like?
So for our angel group, and again, every angel group is a little bit different, we ask for every company to complete an application. And the basic information we request is just to have some sort of pitch deck. You need to know, what your business model is, what you're raising money for, how much you're raising, and what your path forward is. So that's kind of the just basic information we request. And once we get that, I take that to our deal committee. So we have a subset of our board that reviews every deal, and they look at most of the applications that come through and then pick two, and then those two move on to pitch.
So then describe to me what a pitching session looks like. If I was an investor, what can I expect in a time when startups come in front of the group?
Yeah, it's actually really cool. So we host 2 pitches a month, and in that pitch, the company gets 30 minutes. So they get to do their pitch, they get to take questions from the members, and then after that, we do discussion sessions. So after the pitch, then our members really get to discuss amongst themselves. It's private, it's not recorded. The pitching company is not there to really get to the meat of the question of, is this company investable?
And then what happens next? Like, let's say the group wants to move forward. What does that look like?
So every angel in our group makes that decision on their own. They choose to proceed as an individual. So I typically poll the group and say, if you're interested in this company, let me know. I get everyone's information and then pass them forward as a diligence group. So they move forward as a diligence group together. So really you just answer the question, am I interested in learning more? And if you are, you get to proceed with other angels that are also interested in learning more, and you get to participate. It's kind of the thing I love the most about an angel group, is that you really get to learn from others. So if you're a new angel, in their experienced angels moving forward, I've seen them say, I actually am interested in just kind of following along and joining along in the diligence group to hear what questions are asked and how angels really decide if they are ready to write a check.
So if I'm not super risk averse, but I'm hesitant, there's no obligation then if other members choose to move forward. Everything kind of rests on the individual.
Exactly. So your decisions are all individual and personal to you. There's no real commitment to write a check to any particular company, and you can always learn more without obligation. Our angel group, we do ask that our angels commit to writing at least $20,000 worth of investments a year, and that's really just to make sure that the companies that are taking their time to pitch to us are actually in front of people that are ready to write checks. So It's not a hard and fast requirement, it's an ask, and we say just consider before you join our group if you are able to commit to that amount.
And then what if the opposite happens? What if I'm the only one interested and I want to invest?
This is another great part of being a part of a group, because we have had that happen. You know, we've had a brand new angel that said, I really like this company, I've never done this before. And then I reach out to our more experienced angels, and I actually found two that were very experienced in the space that moved forward with him. So they attended all the diligence calls, helped him go through everything, what to ask, here's what to look for, here's what the terms should be like, and even helped him negotiate terms in the end.
So it sounds like you and I'm gonna assume, because we know the good people at 412 Angels, you're gonna help walk investors through this hand in hand, so that they're never in the dark making decisions on their own. They've got a good support structure.
Exactly. You're never in it by yourself. You know, there's always a resource to be found.
All right, so let's say I've made my first investment. How active or passive then do I get to be with the company?
Really, that's up to you. So you can be as passive as you want to be. I think most angels like to get involved, right? These are very early stage companies. There is always work to be done and improvements to be made. I think that's where angels have the most opportunity, is by saying, I know this area of business, I know how to be successful, and I can impart that wisdom to someone who maybe hasn't learned their lessons the hard way. And you can really add value to your investment by being active and participating directly with the company. Most of the companies that apply to pitch, for us, they want angels' expertise. They want their connections and their network. So really, it's the ball is in your court.
And then from the startup's perspective, from the founder, what can they expect on their end? How do they interact with you after the group has decided to make an investment in them?
Right. Again, the ball is in their court on that. You know, I think that most founders, especially early stage, are always anticipating their next fundraise. Mm-hmm. So a lot of them do keep in touch with me directly, and they send updates, which I love to send to our members, especially companies in our portfolio. So it's a long-lasting relationship for the most part. I keep up with most of the companies that have been invested in through our group.
So then, for those startups and founders pitching, are there any things that you're like, I would really love for them to know this is what you need to do, or this is like the things not to do when you come and you engage with an angel group?
This is a great question. Yes, I think that most of our angels that have seen a lot of pitches, or anyone that has seen a lot of pitches, understand the cadence of a pitch. So you kind of have a good feel for what a pretty standard pitch feels like. And I would say for companies, definitely take advantage of all the resources out there on how to structure your pitch, because if it doesn't follow the typical structure that people are used to seeing, it stands out. There's always a time and a place to think outside of the box. I would say your first pitch to an angel group is not that time or place. And the biggest tip I could get, and you would be surprised how many companies miss the mark on this, is really showing to the investors that you understand your business model and you really understand how you're going to make money.
That's what it's all about, because those investors want to see that good return.
Exactly. And when you come in and can't answer that question clearly and succinctly at a level in which anyone sitting in a room can understand, then you're probably not going to get an investment.
I guess that's a big part of it too, is you've really got to make your pitch understandable to everyone in the room and be as clear as possible for the non-technicals or people with different backgrounds.
Exactly. And you have to assume too that as you're out selling your company, a lot of the people that you're selling to aren't going to know all the technical terms. So I think it's a great just kind of gut check for angel investors to say, like, can they sell this? Can they tell me how this works in a way that I understand? Kind of indicates whether or not they'll be able to sell it to other people as they move forward.
And then I guess on the investor side, the good part about that is that if I'm looking to invest, I don't have to be an expert in biotech, cybersecurity, because I can rely on the resources of my colleagues in the angel group and really on the organization as a whole.
Exactly, right. So you do not have to be an expert. You can be as technical or as under technical as you want to be when you're looking at these investments. There's always somebody that has some viewpoint that you may not have considered, and the angels love to share that. So
All right, let's talk a little bit about fund dynamics. Can you explain the difference in limited and general partners?
Right, the main difference is just activity. So your general partner is running the fund, the limited partner is an investor. Um, the general partners typically also invest in the fund, so you really can't say it's just an investor or not. You really want a general partner that is also an investor. Yeah, you want them to have skin in the game, as they say. So the designation really determines whether if someone's just writing a check or if they're running day-to-day operations, vetting the companies, managing staff. That would all happen with a general partner.
How do the nuts and bolts of fund economics work?
So fund economics can feel pretty jargony and it feel a little exclusionary at first, but once you get a handle on it, it's really pretty straightforward. So every fund is different. Every fund has its nuances. Most follow a typical, what we call a 2 and 20 model. So you'll say 2% is the annual management fee, and that fee covers keeping the lights on, paying for attorneys, hiring an accountant, the staff that's actually reviewing the opportunities. And then the 20 is a 20% carry or carried interest. So carried interest is just the return that the GP also participates in after meeting a certain threshold of return.
So let's say I invest in a company and they're successful. What happens then with returns?
So returns are going to come as opportunities are exited. So all of these individual investments will have their own liquidity event. So that could be they're sold to an acquirer or they IPO, some event that happens where money is returned to the fund. As that money is returned, it's then distributed out to investors. So this is not standard, you're not getting a regular quarterly distribution for the most part. Your returns are really distributed as investments are finalized.
And then what kind of timeline am I looking at? Am I going to see returns in the next year? Am I looking further than that? Am I looking 2 or 3 decades out?
Hopefully not 2 to 3 decades, but definitely not a year. I think a year would be very nice. Really 7 to 10 years is kind of the estimate that we use. Of course, some of these investments can go longer, and a lot of it too is determined by how much you participate. So you can participate as the company keeps trucking along in further rounds, or you can choose to exit early. For the most part, we would say not to assume you're going to see a return before 7 years.
And then I know a little bit of this is a numbers game, like on a VC scale. They're making lots of different investments so that one will pay out really big. How many investments do you encourage angels to have out there in order to see one come back with a really good return?
So that's a great question. It's really a personal choice of how much diversification you're looking for, how many checks you want to write. I would say that as an angel, if you're writing one check, your chance for return is probably fairly low. I think 10 is a great number. I think a lot of people say if you make 10 investments, the chances that one of them will hit is great. If you're not comfortable with that many and you want to be more selective, I think that is where being an active angel comes into play. When you really participate with the company, you have maybe a little bit more opportunity to add value directly and help push them forward. So if you're wanting to make fewer investments, I would say be more active within the company.
That's a great way to look at it, so that it's not just a passive form of investing, but it's a way that, if you're going to be really picky and choosy in a good way, you can almost help increase your odds at success by being a really active angel investor.
Exactly. Yeah, the more you participate with the companies, the better their chances for success, especially early on when connections and advice is so critical.
So let's say I'm an angel investor and I've got this founder that I've invested in and I believe in. What are some things I should do to help them out, or maybe some things that I should avoid that could be problematic?
I think it is very easy for someone that is experienced and maybe has a lot of failures under their belt to want to get involved in the minutia and the day-to-day operations. I would say an angel's time is best spent at the higher levels. I would say wait for a founder to ask you for advice, ask you for connections, and then that's a great way to kind of parachute in and help. If you feel the founder is not coming to you directly, offer it up. Send an email. Don't put the founder on the spot. They're very busy. Running a startup is hard work, but offer, and don't assume. I'd say another great way to get involved if you want to be very active, ask to join the board, ask to join the advisory board. Then you really do get to participate in more of the day-to-day decisions. If you're outside of those two kind of control groups, I would say offer before presuming.
All right, so let's say I'm watching this video right now and I want in. What do I need to do to connect with you or our friends at 412 Angels? What's the best way to get involved in one of Arkansas's angel investing groups, or really any angel investing group beyond Arkansas?
Right, I would say start local, especially if you're new. These regional and statewide groups, are a great resource for information, and I think that they really have their thumb on the pulse of what's happening in the state. And then cut your teeth locally and then expand to some of the larger groups. A Google search will help you find either Archangel Alliance or 412 Angels. We're also both active on LinkedIn. Ask around, really ask people in your network, ask people you encounter, hey, have you ever done angel investing? And you would be surprised by the number of people that have participated. So I would say think locally first, and then expand out and see what other groups you find interest in that maybe be more targeted.
Let's say that I'm not risk averse. Since you said that's a bad fit, what's my best way to really get started and kind of dip my toe in the water? Do I want to go to pitch competitions? Do I want to sign up and take in a couple of the pitches to the group? Where do I get started?
Yes, so pitch events are the perfect place to get started. You really get to see what kind of questions are being asked. I think that's the best way to learn, is to go and hear questions. So you might see a company present that you think, where would I even begin with this? I wouldn't even know where to begin to evaluate if this is a investable company or not. And then you start hearing questions from the group, and then you kind of follow, okay, this is where they're getting to with that. That's where they're trying to get to with that. And then in our pitch events, like I said, we have the very private discussions. I think that is also a great place because you get to really hear what people picked up on, maybe what red flags they saw. And after attending a few pitch events, you'll have a really good understanding of what the more seasoned angels are looking for. Beyond that, after you feel a little bit more confident, maybe after attending a pitch event, you say, I like this company. I'm not really sure if I'm ready to write a check. Can I proceed in your diligence group as an observer? So that is a great way to see how these seasoned angels perform diligence. Like, what are they looking for? What documents do they ask for? Who on the team do they ask to meet? Are they doing site visits? Really kind of just tag along and shadow along. We offer mentors within our organization, so we pair new angels up with seasoned angels to kind of give that mentorship. And then from there, I think anybody would feel very confident in trusting their instinct and their abilities at that point to write a check.
I love the transparency in that. You can be an observer that you can kind of take in before maybe you feel ready to jump in yourself. That's wonderful. And I know you mentioned becoming an accredited investor. Like that's something I would need to do. How do I go about that process? Where do I go to get that accreditation?
Right, so it's really just kind of a self-reported designation. You do not need to get a piece of paper that says you're accredited investor. Speak to your attorney, speak to your accountant, ask them. Those are great places to start if you have a wealth advisor. Start there and really ask them, do I meet the criteria for this designation? I think that most people get a little bit, it's a little intimidating, right, to say this is an SEC designation that I have to meet these requirements. And make sure you're reaching out to your network of advisors and checking with them to feel more confident in your answer.
I think that what's really interesting about this whole setup is it's not just you going out there alone, but with this angel group, you've got colleagues, you've got friends who can kind of all go along this journey with you together. What's the importance of relying on that network that you see how does that really benefit the investment side of things?
In this space, in angel investing, network is everything. Connections are everything. Really, being a part of the group is the best way to ensure your success as an angel investor. You're going to see the best deals, you're going to have the best opportunities brought to you, and you're going to have the opportunity to rely on other people's insights and expertise as you move forward. I would say more than anything, anyone that's taken part in the entrepreneurial ecosystem in any state can tell you it's about relationships and knowing people and meeting people. So rely on your network, build your network, and trust in your connections.
So let's say we've got someone watching right now who's on the fence, who's like, I don't really know if this is for me. It sounds great, but I'm just not sure. What would you tell them to really kind of nudge them along to at least check this out and maybe get involved a little bit with their local angel group?
Yeah, reach out. There is no obligation to attend. There's no obligation. I mean, you might get a few emails from me after the fact, but besides that, there's no real obligation to join. I would say in Arkansas specifically, we are friendly to a fault. I think that everyone is willing to take time out of their day to answer your questions, to help you feel comfortable. And I don't think that myself or Quinn at 412 Angels, we're not used car salesmen. We don't do the hard sell. If it's not a fit for you, I think we would be the first to say that this might not be a fit for you.
That's great. Well, thank you for taking the time today to talk with us about angel investing and what it looks like, how people can get involved. Hopefully through this investor education series, we'll see some more angels coming your way.
Great. We would love that.
Thank you so much, Melissa.
Thank you.